Hey traders, are you tired of spending hours analyzing charts, trying to predict market moves, and still struggling to make profitable trades? Look no further. In today's video, I'm going to show you the best free indicator on TradingView if you want to start making money in 2024. We'll cover how this indicator works, how to set it up, and how to use it to make smarter trades. So stick around and let's dive into this exciting journey to become a better trader. First things first, open up TradingView. Once you're in, you'll see a search bar at the top. Use this to find the chart of the asset you're interested in, whether it's Forex, crypto, or stocks. The strategy works for all of them, so pick one that you want to analyze. Now let's talk about the indicator we're going to use, the pullback trading tool. This indicator helps you identify potential pullback opportunities in the market, which can be great entry points for traders. A pullback is a temporary reversal in the direction of the market, and this tool helps you to spot those moments. Here's how to add it to your chart. Look at the top of the TradingView interface and you'll see a button labeled Indicators. Click on it, a search bar will appear. Type in Pullback Trading Tool and you'll see a list of results. Find the one that matches and click on it to add it to your chart. Once the indicator is added, you'll notice some new lines and signals on your charts. These are designed to help you spot pullbacks. But before we get into that, what if I told you that 90% of retail traders lose money because they can't compete with Wall Street's algorithms? Now imagine flipping the script and turning their tools into your advantage. Sounds impossible? Not anymore. Introducing the Premium AI Indicators, cutting-edge tool that blend the best of artificial intelligence with market-proven strategies. These aren't just your run-of-the-mill indicators. They're built to predict market moves before they happen, giving you a laser-sharp edge over the competition. Thousands of traders just like you are already seeing incredible results. These tools take the guesswork out of trading by adapting in real market, identifying reversal zones, and even revealing hidden supply and demand levels that other traders simply can't see. And here's the kicker. These AI indicators are only available to a limited number of traders. Why? Because the edge needs to stay exclusive. Once the spots are gone, they're gone. Don't let this opportunity slip through your fingers. So, are you ready to stop guessing and start winning? Click the link below, secure your spot, and gain instant access to the most advanced trading tools on the market. Act now, because when these spots are filled, they're gone for good. So don't wait, take control of your trading future today. Alright, let's dive back into the strategy. Head over to the Pullback Trading Tool indicator to optimize its settings. In the input section, make sure the source for all moving averages is set to close. Then disable the Show MA ribbon. No need to change these options. Fast ribbon MA type, fast ribbon MA length, a slow ribbon MA type, a slow ribbon MA length, and anchor time frame. Ensure the fast anchored MA type is set to EMA. Then change the fast anchored MA length to 45. Set the medium anchored MA type to EMA as well, and then adjust the medium anchored MA length to 90. Next, enable the Show a Slow Anchored MA. Set its type to EMA and leave its length at 200. The signal anchor type should be also EMA, with its length set to 63. Disable the Show Entries for Trend Breaks option, Show Entries for PB Fractal Breaks option, and use Close Break instead of Touch Fractal Break option. Change the Pullback Lookback length to 7. Then enable the Show Color Bars Close relative to Signal MA, and then disable the other options. Finally, head to the Style tab where you can customize the color and thickness of the options to your liking. The indicator we're talking about has 4 main lines: the fast anchored MA line, the medium anchored MA line, the signal MA line, and the slow anchored MA line. These lines are essentially moving averages which smooth out price data to help us identify the direction of the trend. When we say the price action is above all these moving average lines, it means the current price of the asset is higher than the average prices over different periods. This is a strong signal that the market is in a bullish trend or an up uptrend. In simple terms, the market is moving upward, and this is generally a good time to consider buying because prices are likely to continue rising. Conversely, when the price action is below all moving averages, it means the current price is lower than the average prices over these periods. This indicates a bearish trend or downtrend. The market is moving downwards, and it might be a good time to sell or avoid buying because prices are likely to keep falling. So when the price is above both the anchored MA ribbon and the slow anchored MA line, it signals that we are in an uptrend. This means the market is generally moving upward. In this scenario, we wait for the price retrace or pull back to the anchored MA ribbon. This pullback is a temporary dip in the price within the overall uptrend. Once the price pull back to the anchored MA ribbon, the next step is to identify the last swing high. The last swing high is the highest point of the price reached before it started to pull back. After identifying this point, we wait for the price to break above it. When the price breaks above the last swing high, it indicates that the market is likely to continue moving upwards. This is our buy signal, meaning it's good time to enter the trade. After entering the trade, we need to set a stop loss to manage our risk. This stop loss is a predetermined price level at which we will exit the trade to prevent further losses. In this case, we set the stop loss slightly below the anchored MA ribbon or slightly below the recent swing low. The swing low is the lowest point that the price reached during the pullback. Next, we set our take profit level. The take profit level is the price at which we will exit the trade to secure our profits. We set the take profit at a level that is 1.5 times greater than the stop loss. For example, if our stop loss is $10 below our entry price, our take profit would be $15 above our entry price. And when the price is below both anchored MA ribbon and a slow anchored MA line, it indicates that we are in a downtrend. This means the market is generally moving downwards. In this scenario, we wait for the price to pull back to the anchored MA ribbon. This pullback is a temporary rise in the price within the overall downtrend. Once the price pulls back to the anchored MA ribbon, the next step is to identify the last swing low. The swing low is the lowest point that the price reached before it had started to pull back up. After identifying this point, we wait for the price to break below it. When the price breaks below the last swing low, it signals that the market is likely to continue moving downwards. This is our sell signal, meaning it's good time to enter a short trade. After entering the trade, we need to set a stop loss to manage our risk. The stop loss is predetermined price level at which we will exit the trade to prevent further losses. In this case, we set the stop loss slightly above the anchored MA ribbon or slightly above the recent swing high. The swing high is the highest point that price reached during the pullback. Next, we set the take profit level. The take profit is the price at which we will exit the trade to secure our profits. We set the take profit at a level that is 1.5 times greater than the stop loss. For example, if our stop loss is $10 above our entry price, our take profit would be $15 below our entry price. Now let's dive into some examples to get a better grasp of this strategy. We're looking at the Ethereum 5-minute chart. Clearly, we're in a downtrend because the price is below all the moving average lines. Here the price retraced back to the anchored MA ribbon. If we draw a horizontal line from the last swing low, we can enter a sell trade when the price breaks below this line. Now let's find the next signal. We see another pullback, but this time the price couldn't break below the recent swing low. Moving on, we have yet another pullback. Drawing a horizontal line from the new recent swing low, we notice the price couldn't break below this line either. The next pullback also fails to break the recent swing low. After these failed attempts, the price eventually breaks through the moving averages, signaling the start of an uptrend. This shift indicates that the market is now moving upwards and we should adjust our strategy accordingly. And that's a wrap up on our strategy breakdown. Before you go, don't miss out on our next recommended video. It covers some extremely important trading tips that you won't want to miss. Click on the screen now to watch it and take your trading skills to the next level. Happy trading!